So the topic is Indian financial system from module first. What is Indian financial system, or we can say what is financial system? So let us understand the meaning of financial system. The financial system may be understood as an intermediary and facilitates the flow of funds from the areas of surplus to the areas of deficit. It means कि जहाँ कमी हो फाइनेंस की, जहाँ कमी हो सो उसमें से द एरिया ऑफ सरप्लस से उस कमी को पूरा करना ही इंडियन फाइनेंशियल सिस्टम का मीनिंग होता है. सो in Indian financial system, it is a composition of various institutions, markets, regulations, and laws, practices, money managers, transactions, and claims and liabilities. So basically, the objective of the financial system is to supply funds to various sectors and activities of the economy in a way that promote the fullest possible utilization of resources. Okay, let's talk about the features of Indian financial system. So the first feature is the provide linkage between depositor and investor. Indian financial system provides an ideal linkage between depositors and investors, thus encouraging both saving and investment. The second one is expansion of financial market. Exactly, financial system facilitates expansion of financial market over space and time. The third one is allocation of financial resources. Financial system promotes efficient allocation of financial resources for socially desirable and economically productive purposes. And the most important features of financial system is allocation of risk. One of the most important features of a financial system is to achieve optimum allocation of risk bearing. Okay, now coming to next features, Indian financial system. So there are basically four categories of Indian financial system. That is, the first one is India financial institutions. Second is financial markets. Third is financial instruments, and fourth one is financial services. So let us talk about these components one by one. So the first one is Indian financial institutions. So the term financial institutions includes all kinds of organization which intermediate and facilitate financial transaction of both individuals and corporate customer. Thus, it refers to all kinds of FIs and investing institutions which facilitate financial transaction in financial market. So, financial institutions are further categorized into into three components, that is regulatory bodies. The regulatory bodies generally regulate the financial institutions, that is SEBI, Security Exchange Board of India, governs stock market. IRDA, IRDA, that is Insurance Regulatory Development Authority, that governs the insurance market, insurance industries. And the third one is RBI. RBI, as we know, the Reserve Bank of India, the Central Bank of India, who governs the overall the banking industries. Now coming to the next, intermediaries. Intermediaries are those financial institutions which generally supply short-term funds. Okay, they includes both banking and non-banking. In banking, the banks are like SBI, State Bank of India, Punjab National Bank, etc. are the example. While talking to non-banking intermediaries, these are like LIC, Life Insurance Corporation, General Insurance Corporation, etc. Okay, coming to next, secondary financial services. What is secondary financial services? It generally coming to the next, that is non-intermediaries. So what is non-intermediaries? These non-intermediaries mainly provide long-term funds. In case of intermediaries, they supply short-term funds, but in case of non-intermediaries, they mainly provide long-term funds to individuals and corporate customers. They consist of term lending institutions like financial corporation and investment institutions like NABARD, IDBI, IFCI, etc. Okay. So coming next, that is financial market. What is financial market? Generally speaking, there is no specific place or location to indicate a financial market. Okay, wherever a financial transaction take place, it is deemed to have taken place in the financial market. Hence, financial markets are pervasive in nature, since financial transactions are themselves very pervasive throughout the economic system. Thus, financial markets are generally categorized into two markets, that is organized and unorganized markets. In organized market, there are very strict supervision, rules and regulation, etc. and etc. Like if we talk about example like capital market, gone by SEBI, Security Exchange Board of India. So basically there are very n numbers of rules and regulation in organized market. Coming to the next, unorganized markets. So unorganized market, there are number of money lenders, indigenous bankers, traders, etc., who lend money to the public. What is indigenous bankers generally? Indigenous bankers also collect deposit from the public. There are also private finance companies, cheat funds, etc., whose activities are not controlled by the RBI. The RBI has already taken some steps to bring out unorganized sector under the organized fold. So these are the basic two components of financial market, that is organized market and unorganized markets. Coming to next, financial instrument. So the in financial instrument, financial instrument is a claim against a person or an institution for the payment of at a future date sum of money or a periodic payment in the form of interest or dividend. So the financial instrument help the financial markets and the financial intermediaries to perform the important role of channelizing funds from the lenders to borrowers. Okay, so there are main two types of financial instrument, that is primary financial instrument. So in primary financial instrument, it is directly a financial investment whose price is based directly on its market value. For example, stock, bonds, certificate of deposit, bill, and anything else that it has own value. By contrast, the price of derivatives instruments such as options, swaps, and futures is based on the value of their underlying assets. Now coming to the next, secondary financial instrument. Secondary financial instrument generally includes fixed income instrument such as bonds, debentures, corporate gift, terms fixed deposit, preference stock, etc., as well as the variable income instrument like equity, derivatives, mutual funds, etc. So these are the financial instrument. And the fourth one is financial services. In case of financial services, there are two types of financial services in India. The first one is fund based and second based is fee based. In fund based, funds are transformed into assets. Okay, so the various example in fund based companies like lease financing. What is lease financing? May be defined as a contractual agreement or transaction in which a party on an assets provide the asset for use to another or transfer the right to use the equipment to the user over a certain period of time for consideration. Consideration means something in return in form of periodic payment with or without a further payment, or we can say that premium. Okay, these are lease financing. And coming to next, hire purchase. What is hire purchase? It generally means hiring of an assets for a period of time and at the end of period purchasing the same. Coming to next, factoring. Factoring generally is Latin word which means a doer. Doer. Okay. So it generally means a factor as one that lends money to producers and dealers on the security of account receivable or debtors. And mutual fund, as we all know, mutual fund is an investment vehicle that is made up of a pool of funds collected from many investors for the purpose of investing in securities such as stock, bonds, money market instrument and similar assets. The next one is fee based. The next one is fee based financial services. Financial services is generally do not create immediate funds. They enable the creation of funds through their services for which they charge a fee. It includes merchant banking, credit rating. So the what is banking? Merchant banker is an individual or institution who or which act as underwriter or agent for corporation and municipalities issuing securities. They also maintain broker dealer operations market for previously issued securities and offer advisory services to investor. Coming for credit rating, in case of credit rating, credit rating is generally the meaning of credit rating is generally gives credit to company or gives a rate according to their capability. Okay, so the process of assigning a symbol with specific reference to the instrument being rated. Okay, uh, that act as an indicator of the current opinion of the company. लाइक अभी जैसे कोई लोन लेता है, कोई इंडिविजुअल लोन लेता है, तो उसकी सिविल स्कोर की चेक की जाती है कि हाँ सिविल स्कोर ये बताता है कि आप लोन लेने के लिए एलिजिबल हो कि नहीं. सिमिलरली इन केस ऑफ कंपनीज, जब कंपनीज को लोन चाहिए होता है तो वो जब जाती हैं लोन लेने फाइनेंशियल मार्केट्स में, तो उनकी क्रेडिट रेटिंग चेक की जाती है कि हाँ व्हाट इज योर क्रेडिट रेटिंग, आप लोन लेने के लिए एलिजिबल हो कि नहीं. So there are some further procedure of credit rating that will be discussed in further chapters. So these are the basic discussion about the Indian financial system. Thank you.